Hi, and welcome to another chart session with Robinson at Tough Guy Trading. Today I wanted to just briefly talk about some of the patterns that happen after a trend has happened. So far I'm looking at my charts here. It's about 2:48 in the afternoon. I live in Boston, so if you hear a little background noise, that's what it is. But if we look at some of these charts here and just look at some of the patterns that form at the end of the day, because if you've missed the move or you want to set up for another trend that may be taking place, you need to know how to make that trend happen, right? And the only way to be able to do that is to set up your patterns, or have patterns that you understand already that you're going to be waiting for. Or you could try to just trade, and right now is probably not the best time to try to trade, because as you can see, the price is barely moving. The price is barely moving. It's not going anywhere. So just trying to do anything right now was kind of futile. But if you look for patterns that may develop at the end of the day, of a big move or whatever that day, you could start to realize that there's going to be a lot of different types of moves throughout the day. Okay, I'm sorry folks, that's my phone. Yeah, so if we look at just the patterns that are happening here, I will blow up this chart first. This is a chart of gold on the 15-minute chart, right? So it kind of went sideways for most of the morning, and then right here at 9:30 it breaks out, breaks the 200, pulls back, breaks the 200 again, kind of trades into it, and then after that it never comes back into the 200 again. It's just gone all day long. It pulled back once here and then died again. Whenever the 200 is flat, it's always a strong point of support or resistance. So when it gets broken, especially on a 15-minute chart, it can mean huge trends for the day, or just an overall direction for the rest of the day. But if you look at this, at the end of this long move down here, you have what? 1, 2. You have a double bottom there. So that may be a potential trend that can form at the end of the day. Right after all the selling is done, at some point it's going to make a double bottom. Maybe it makes a new low like it did here in gold at 1590. Maybe it makes a double bottom there. So there's a lot of different things that can happen at the end of every single trend, at the end of every single day. And as a trader, it's our job to just kind of understand, what's happening while we're trading, or what could happen at the end of the day, so you could be prepared for it and you can anticipate. Like I always say, I never try to predict, I always anticipate. So at the end of trends, there's just normal setups that happen at the end of them. If we go look at silver real quick here, silver, same thing as gold, double bottom. This is actually coming into a triple bottom here. It may break, but who knows? This is just one big sideways move. Big up and down, but it's a sideways move. And like I said, these are normal areas. After all this selling, it's probably not a good idea to be trading in this area here, because it has no real direction. And if you had to trade it and you just couldn't go away and you had to trade it, I'm on a 15-minute now, maybe it would make sense to break down to a 5-minute. Oh man, the 5-minute looks bad. 1 minute? Yeah, so maybe you could have traded it on the 1 minute. A lot of the times if you have trends, let me talk about this for a while. A lot of times if you have trends that are going sideways on a bigger time frame, if you go down all the way, you'll find, at least one time frame that's still tradable with a trend, right? Because this goes into the top Bollinger Band, dies here, comes all the way down, makes a brand new low. At this new low right here is a good position to go long, right? After it broke the moving averages, proved that it could stay above the moving average. Comes here again, comes to the 200. Like I said, when the 200 is kind of flat, it's really strong support or resistance. Comes into this resistance, breaks it, gets above the 200, and then stays above the 200 for a while. And then after this move up here outside the Bollinger Band, it kind of just trades sideways. Normally, anytime something goes outside the Bollinger Band, it's time to exit. Just a good rule of thumb. So what am I talking about, folks? I'm talking about trends that develop, or patterns that happen at the end of any trend. If we look at palladium here, this is platinum futures here we're looking at. At the end of all this selling, bottom, double bottom, coming into a triple bottom. Same thing as silver and gold. We can go to stocks and look at the same thing. Let's look at Chipotle stock. Chipotle didn't do much today. From this, every shaded area represents the day. So the shaded area, the most recent part would be here, is where we're at now, and the market is still trading right now. But this is a bottom, bottom, bottom. So nothing really happened in Chipotle. But if you look further out, look at all of this buying, this huge move up. So at the end of every trend, you get these double bottoms, right? Or triple bottoms. So we showed you a few stocks. I showed you a few futures, and now we've looked at one stock. We can go look at Apple, of course, if I can get the right symbol in there. We can look at Apple here. Same thing in Apple. Big move up. 1, big move up. 2, outside the Bollinger Band, starts to pull back, comes into the 8. Third leg up here. After this third leg up, it just kind of trades sideways. Finds some new support here. Breaks out again, makes a new high, and then since then it's just kind of trading sideways a little bit here. But at the end of all of these trends, you're going to get a bottom here, and then you're getting another bottom there. It may come into the 200, it may hold above the 200, I'm not sure. We can look at the S&P 500 as well and see that in the S&P 500, same thing, big move up. If we want to, get technical, it's a move up here, trade sideways. Another leg up, a good decent leg up here. If I were day trading this though, this would be my initial move up, sideways. Second move up, because this comes back to this 20 period moving average, and before that it never did. So that would be the second leg up, and then this would obviously be the third leg up here. And after it comes back into the 20 again here, checks in with the 20, it never comes back. So at the end of this uptrend here, it kind of just moves sideways, and then we get a bottom, double bottom. In my next, in more videos later, I'm going to explain how I see the markets. Right now, I think it's just important to just talk about general principles, general themes, that it doesn't matter if you're a swing trader, day trader. I could do this on a 4-hour chart, 15-minute chart, 1-minute chart. It doesn't matter. These are just general things that happen at the end of every trend. And if you start to pay attention to when things happen where, it gets a lot easier to trade the market that's in front of you. And you could bounce around to a lot of different symbols, right? I'm in stocks, I'm in futures right now, I'm showing you everything. Just because the patterns are so common, they're going to be everywhere, right? So this is Euro FX futures. I think Greece is getting their situation, getting their house in order now. So we get this, you get a nice little move up here from this initial low. You get the 1 here, you get the second leg up here, outside the Bollinger Band, pulls back, gets inside the Bollinger Band again. After this nice little trend up, the whole market just trades sideways. And bottom, double bottom. Why am I saying bottom, double bottom all the time and showing the double bottoms? Because we're in an uptrend. If we're in an uptrend and it starts to go down, we need to know that it can hold. And when it does a double bottom, a lot of the times it can hold. And if you notice, a lot of these pullbacks, like after this move up, a lot of the pullbacks are going sideways. They're not just, extremely drastically going down and erasing all of the uptrend that it's made. So when you see these double bottoms hold, it's a good indication that the trend can continue. But that trend may continue later on tonight. It may continue tomorrow. It's 3 o'clock in the afternoon here. So it may continue later on tonight. It may continue in tomorrow. I don't know when it'll start again. At some point, it will break out again. And it may break out to the downside. I may be completely wrong. And that's why I'm saying general themes, general themes. These are general things to happen. And around these areas, if you're paying attention, you can anticipate a move. Just something good to think about. Now we look at the Swiss franc, same thing, big move up. Everything's kind of doing the same thing. It doesn't really matter to me. I trade everything, stocks, futures, Forex. They all do the same thing to me. They all do. I think if you make it complicated, then it is complicated. If you don't make it complicated and say, hey, this is going up, and then it went sideways, and then it went up again, it's a lot easier to understand it instead of making it very, very technical. I could get very technical. I've gone to school to learn how to trade, but I think once you have done it for a while, you need to make it simplistic for other people to understand, because the jargon gets a little bit crazy sometimes. This is my demo account here, so we're pretty much done now. This is my demo account here. I've been trading all day on this demo account. I try to trade on the same day that I'm going to make a video, just to show some of the skills or just what I'm doing in the markets, and I've had a very, very good day today. So if you look at in platinum here, where it dropped down drastically and then pulled back and then made this double bottom. Pretty much, I pretty much anticipated that because the sideways move that it was doing. I used a lot of contracts, a lot of leverage today.